Kia ora koutou katoa, ko Michelle Lombard toku ingoa. Good afternoon, everybody. My name is Michelle Lombard, and I'm the Director of Accounting Standards here at the External Reporting Board. Welcome to our Need to Know series, focused on incorporated societies, specifically on the financial reporting requirements for incorporated societies. With me today, I've got Alex Steiner. He's our expert project manager that deals with incorporated societies here at the External Reporting Board. While everybody is settling into this session, I might just kick off with some housekeeping rules. So just to keep your video off and remain on mute. We will go through the session. As we go through, you are welcome to drop in any questions that you might have in our Q&A box. We've got Gali in the back end that will deal with some of the queries there. And then we'll also take some of the queries at the back end of the session where Alex will deal with those. I do want to highlight or caveat that as the standard setter, we're unable to give you accounting advice. So if you have a question on principles or application, happy with those. But if it's a specific question that's unique to your scenario, we'll always defer to getting accounting advice for those. All right. A question that we often get is, will the slides and recordings be made available? The answer is yes. After this webinar, we'll make all our slides and recordings available for you if you've registered for this session, and we will also make that available on our website. We will ask you to please provide us with your feedback at the back end of the session for the survey that will follow. It's always useful for us to get a sense of what worked and what didn't work so that we can improve our quality of our Need to Knows as well. Once again, kia ora, and thank you for joining us today for this webinar. Right. To start off, we thought we might just start off with introductions of the External Reporting Board. We do appreciate that many incorporated societies wouldn't have engaged with the External Reporting Board before. So maybe just starting off with who we are helps you understand how we fit into the ecosystem. So the External Reporting Board, or the XRB, are responsible for external reporting. We look after financial reporting standards, climate standards, as well as auditing and assurance standards. The outcomes we seek is to ensure that our information that's being put out into market is trusted, informative, and integrated. While we do determine what the types of information is that is reported, we never determine who needs to apply our standards. So that's an important piece or distinguishing factor about our role in the ecosystem. It's just making sure that we're all aware that incorporated societies coming into the external reporting banner, and that's determined by primary legislation. We will only determine the what. So once we know incorporated societies is having to use our standards, we then give you some clarity about what the information is that you need to report on. Right. With that in mind, I will hand over to Alex. He's going to go into quite a lot of detail in incorporated societies. I just wanted to give one caveat before we start this session or before we go into the detail. If you have dialed into a previous Need to Know on incorporated societies, specifically the September 2025 one, this will be very similar content to that. So it's not new information. We're just repeating the same information just by virtue of the incorporated societies re-registration deadline fast approaching. So hope you enjoy the session, and I'll hand over to Alex now.
Cool. Thank you, Michelle. Kia ora, everyone. So my name is Alex Steiner, and I'm a project manager here in the Accounting Standards team at the External Reporting Board. So in terms of what we will cover today, we are going to briefly touch on the background to these changes, but we will be largely focusing on the new financial reporting requirements. So how to navigate the XRB accounting standards. And we will also go into some considerations when you're undertaking that first time application. So in terms of the background, I realise that many of you will be aware of this, but the new Act, the Incorporated Societies Act 2022, has been introduced, and that is to replace the previous Act, which was the Incorporated Societies Act of 1908, which obviously is over 100 years old. And on the back of a review of that legislation, it was noted that it was outdated in parts and could benefit from some clearer governance requirements. And so we did see a process over, I guess, the last 10 years or so, where the Act was drafted, and effectively this new Act took effect in October 2023. And so with this Act being introduced, there was a 2.5-year transition period where it replaces that old 1908 Act. And many societies have been working through this transition process to re-register. And that is because if they wish to remain incorporated, they need to be re-registering under the new Act. And we'll see there that the deadline is now almost over. It's 5 April 2026, once that old Act is fully replaced by the new Act. So the transition to this Act and the new Act itself does have several implications for many incorporated societies. So they will be subject to some new rules, particularly around those governance requirements that I've noted there. And these changes mean that many of them will need to update their constitution for these updated requirements. And of course, I just want to highlight that there are new financial reporting requirements, which is what we'll be focusing on in this session. So in terms of those financial reporting requirements, incorporated societies previously, they've only been subject to specific reporting requirements that were listed out in the old 1908 Act, and or any other requirement that may have been agreed in their own constitution. And so this means that a large portion of them, a large amount of societies have never needed to engage with the XRB or any of the standards that we issue. And I guess a final point on the slide is that really only once a society has re-registered do the rules of the new Act take effect, and the new financial reporting requirements need to be followed. So what are the new financial reporting requirements? So in summary, some incorporated societies will need to prepare financial statements in line with the XRB standards. However, not all have to, and there is one exception. So those societies that meet the criteria of a small society as defined by the new Act, they can choose. So they can choose to either follow requirements, so these are specific requirements that are listed out in Section 104 of the Act, or they can use the XRB reporting standards. And finally, if a society is a charity, which many societies are registered charities, they can continue, or they need to continue to follow the requirements of the Charities Act. And so just with these requirements, I wanted just to go into just a little bit more detail to show how the legislation plays through. And so I've pulled up here a section from the Incorporated Societies Act. And so what we can see here is that the legislation refers to preparing financial statements in accordance with generally accepted accounting practice, or GAAP for short. And this is for specified not-for-profit entities. And then you also see that in some other cases, there may be GAAP, but also a non-GAAP standard. And so I just want to make clear that where GAAP or a non-GAAP standard is referred to, this has been specifically defined in legislation to mean the applicable financial reporting standards issued by the XRB. So those societies that do not meet the criteria to be a small society will need to apply XRB standards, whether it is GAAP or a non-GAAP standard. Now, I note that I will tie in what a specified not-for-profit entity is in a later slide. It does correlate closely to how you use the XRB accounting standards framework. And just a final point around the charities, Section 108 lists out the detail about charities needing to continue to apply the requirements of the Charities Act. And before moving into the XRB standards, I will just briefly cover off what a small society is. So, as noted previously, the small society is carved out from needing to apply XRB standards. And this was on the basis that legislators wanted to reduce change on some of those very small societies in New Zealand. And to be a small society, you must have both your operating payments and current assets of less than $50,000 in each of your last 2 financial years. And you must not also be a registered charity or an approved donee organisation with inland revenue. I note that operating payments are the total of your expenses that were actually paid during the year, so either in cash or from your bank account, but this does exclude capital payments such as purchasing assets or debt repayments. And then current assets, these are defined in the Incorporated Societies regulations, specifically for this criteria in the Act. And total current assets are those assets that are expected to be consumed, used up, or sold within 12 months after the society's financial year end. They may also be assets that are primarily held for the purpose of being traded, or it could be a bank account, a deposit, or something similar that is not restricted and in use for at least those 12 months after your society's after the society's financial year end. So ultimately, if you are a small society, you get to choose to either prepare your financial statements in line with the requirements set out in the Act, or you can apply XRB standards. And I note that the minimum requirements in Section 104, these are practically the same as what was in the old Act. And so they state that you need to prepare that your financial statements must contain information on your income and expenses, or your receipts and payments, your assets and liabilities, and any security interests on property of the society. So if you elect this option, nothing much changes. You can largely continue to prepare financial statements in the same way that you have always done. Okay, so for all other societies, you will need to apply the XRB standards. And for some context, the XRB issues reporting standards for 3 sectors. So the not-for-profit, the public sector, and the for-profit sector. And to work out the specific accounting standard that you need to apply, you would first identify which sector applies. Now, most societies we consider will be not-for-profit entities for the purposes of the XRB framework, and therefore can apply the accounting standards of the not-for-profit sector. And we expect that most societies can safely assume this based on the primary nature of what most societies do, or what they have been started for. And the XRB considers that a not-for-profit is an entity that aims to deliver goods or services for community or social benefit, not with an intention for returns on equity. So a really important point around this, though, is that this does not mean that if you generate a surplus that you cannot be a not-for-profit. It more just ties back to your intentions on how you will use those surpluses. So there is further information in a foundational document on our website called XRB-A1, Application of the Accounting Standards Framework, if you need further information on the sectors. So within each sector, there can be a diverse range of entities. So our standards are grouped by reporting tiers to scale these requirements over the financial size of an organisation. And on this particular slide, I have outlined the reporting tiers for the not-for-profit sector, given that we expect the majority of societies will use the standards in this sector. So upon needing to apply these new financial reporting requirements of the Act, you need to assess your current year that you are going to report in your financial statements in respect of these tier thresholds. So what we see here is that tiers 1 and 2, these are for our larger organisations. It is, if you apply the PBE standards, it is considered generally accepted accounting practice. These are based on international standards. A very small portion of societies will need to apply these tiers. Tier 3 is for our mid-range to smaller organisations. And again, this is also considered generally accepted accounting practice. So it's a single New Zealand financial reporting standard. And tier 4 is for our smallest organisations. And it is a single New Zealand financial reporting standard, but this one is considered to be a non-GAAP standard. And with tier 4, the standard has been intended to be applied by those without any expertise in accounting. And we expect that out of those societies that are required to apply XRB standards, that the majority will fall into this tier. So I do just want to tie this back to the legislation I showed in several slides ago. So a specified not-for-profit entity, I introduced that earlier. Now, a specified not-for-profit entity is required to apply generally accepted accounting practice, or GAAP, and so that is tiers 1, 2, or 3. And a specified not-for-profit entity is an entity who, in the last 2 accounting periods, had total operating payments of more than 140,000. So we can see that this effectively correlates with that, that tier 4 threshold and the reporting tiers that are set out in this sector. So just a point in terms of the amounts for these thresholds, for societies that own or control other entities, the reporting tier must be assessed based on the total expenses and operating payments of the consolidated or group position. So this means the sum of your total expenses and your operating payments across your society and all entities it controls. Now, I do just have a couple of polls just to garner some feedback. I'll just put those up. If you give me 1 second. It'd be great to get your feedback on those. Cool, so I've launched 1 poll there, and I'll give it a few seconds, and then I'll move on to poll 2. Okay, I'll close that one off very shortly. Just give that a few more seconds. Okay, thank you all very much. It's very helpful for us. I'm going to end that poll. And now I will launch just another one very quickly as well. I'll probably give about 30 seconds for this. And hopefully that's now come up on everyone's screens. Okay, cool. I'll just give that another couple of seconds there. Okay, wonderful. Thank you so much for answering those.
I might just, sorry, Alex, if you don't mind,
if
I can just quickly talk about these polls. I guess we're hoping that these, to understand which reporting requirements you fall into is easy enough to determine. So if you are finding it quite difficult, which we see is happening on a case-by-case basis. I think it's useful if you do reach out to our team. We're happy to just guide you through that and how that might work, etc., and just to understand what the challenges might be. Thanks.
Cool. Thank you, Michelle. And I guess just one final point I would like to make on this slide is that if you have public accountability as defined in XRBA 1, you are required to apply Tier 1, but please note that public accountability is specifically defined. It's a specifically defined term in XRBA 1, referring to if you're listed on a stock exchange, or you might hold funds for a broad range of outsiders in a fiduciary capacity. So it's a very specific meaning. So please don't take a general meaning of this word when you're making an assessment whether your society is publicly accountable. Okay, so I will briefly cover and provide an overview of both the Tier 3 and 4 standards, as we do expect that these standards will be the most commonly applied for incorporated societies. So I'll start with the Tier 3 not-for-profit standard. Now, as mentioned before, it is a single standard, so all your requirements are in one place. The standard is accrual-based, so you're recording income and expenses or transactions as they occur, not necessarily when cash comes in or out of your bank account. And for first-time application, there is a concession. So this requirement, or sorry, this provision is outlined in Appendix C of the standard. But these transition requirements generally allow you to attach your previous year financial statements and accounting policies instead of applying the Tier 3 standard to your previous year. So where I have been using the term financial statements, this standard refers to them as a performance report. And a performance report includes the following components. So there will be a statement of service performance. And so this comprise non-financial information about the medium to long-term objectives of the society and significant activities that may have been undertaken during the year. Then there is a statement of financial performance, position, cash flows, be a statement of accounting policy, and then there'll be some notes that are also required. And just want to note that many societies may not have prepared a statement of service performance or even necessarily a statement of cash flows before. So these particular components just may be needed to be given some additional consideration in that first time application. And one other point I'd like to make about the standard is that it does prescribe the use of specific categories for grouping your revenue, expenses, your assets and liabilities into, which again, this could be quite a change compared to how a society may have previously prepared their financial statements. Now, for Tier 4, so again, similar to Tier 3, it is a single standard, so all your requirements are in one place. This standard is cash-based though. So this means that transactions are only recorded when cash comes in or out of your bank account. And we do understand that many societies may have been applying accrual accounting that fall into this tier. And if they do wish to continue with accrual accounting, they can opt up to that Tier 3 standard. For first-time application, similar to Tier 3, instead of applying the Tier 4 standard to your previous year, you can instead also attach your previous year financial statements. And what we see in terms of the performance report, it's generally less is required than the Tier 3 standard. There is a statement of service performance. This only requires information about the activities that have been undertaken during the year. Then there is a statement of cash received and cash paid. And then we'll ask, the standard will outline some additional information in your accounting policies and notes. And this is generally about how you've done your accounting. I.e., might ask you to state that the accounts are prepared in line with the Tier 4 standard, that they're on a cash basis, and whether amounts are GST inclusive or exclusive. We'll also ask about significant assets and liabilities under very specific types. And you may need to or look to estimate a value for the assets there. And we'll also ask for information with transactions with related parties, if any. So once again, I'll just point out that the standard also prescribes the use of specific categories for grouping your cash receipts and your cash payments into, which again may be a bit of a change from what societies are used to. So when do we need to apply the new financial reporting requirements? So as noted, these requirements only take effect once your society has re-registered under the new Act. So from that date, you must apply the requirements to the preparation of your next set of financial statements. And as an example, if your society has a financial year of 30 June and decides to re-register in December 2025, if you have already completed your 30 June 2025 financial statements, then your society would apply those new requirements to the current year, i.e. it's 30 June 2026 year end. And just another important note around timeline for preparing your financial statements is that the new Act requires that these are completed and along with the annual return are filed within 6 months of a society's financial year end. So now I'll just move into some first-time application considerations, and I would just like to highlight in a little bit more detail how that transition to XRB standards actually looks like under Tier 3 and 4. So there's quite a bit on this particular slide, but I'll talk through it, but it's meant to be an illustration of a society's financial year end and their re-registration date and how the transition to the Tier 3 or the Tier 4 standard works in practice. So in this particular example, we have a society that has re-registered in December 2025, and they have a financial year end of March. And so the next set of financial statements that they are preparing are going to be for the financial year end 31 March 2026. And for both the Tier 3 and 4 standards, the transition requirements, as mentioned before, they're covered in the appendices to both those standards. In the Tier 3 standard, there's the general provisions and the special provisions, and then the Tier 4 standard, there's option A and option B. So what this illustration shows that if the entity was going to apply the Tier 3 standard, if they decide to apply the general provisions, they will need to apply the requirements of the Tier 3 not-for-profit standard to their financial information from 1 April 2024, and therefore present both the current year and comparative year in line with those Tier 3 requirements. If they decided to apply the special provisions, they would only need to apply the requirements of the Tier 3 standard to their financial information from 1 April 2025, and therefore they'd present the current year only, but they would then need to attach the prior year financial statements for the year ended 31 March 2025 as that comparative information. And effectively, this is the same for Tier 4. Option B, you apply the Tier 4 standard to both your current and comparative year when you present that in your financial statements, whereas option A, you would just present your current year in line with the Tier 4 standard, and you would attach your previous year financial statements to that. Another first-time application consideration I do want to raise relates to the use of categories within the Tier 3 and 4 standards. They are quite prescriptive in terms of how you should present your revenue, your receipts, your expenses, and your payments. So I will use the revenue categories to showcase this. So when you are preparing your statement of financial performance or your statement of cash received and cash paid, you must classify revenue using these categories that are outlined in both these standards. And I've put these up here on the table on this particular slide. And what you will notice is that Tier 3 and 4, they do closely align. These categories do have similar themes, and so we'll see that there's revenue from donations and fundraising. Then if you go down, there's revenue from grants. Moving down the list, both have revenue from service delivery grants or contracts, get some membership fees and subscriptions, and then there's revenue from your commercial activities and then revenue from your investment activities. So I suppose just some key things to understand when you are applying these categories, and this can be more broadly than just revenue as well, is that you're not meant to combine or split these categories in the statement of financial performance itself. If needed and you want to provide more detail, then you can do so in the notes to the performance report. So if you were wanting to, say, provide a breakdown of the different donations that you have received, you would do so within the notes. A really important thing to be aware of is that the names of these categories, they can be changed to be more understandable, but you just must maintain that the separate categories. And I also acknowledge that some judgment may be required in selecting the appropriate category. A revenue activity, for instance, could have features of several of these categories. And for societies in particular, they could have similar revenue, but the purpose behind the particular activity might dictate how it is categorized, and it could end up being different. And one other point, I guess, around incorporated societies is that we expect revenue or receipts from membership fees and subscriptions will be common. But we also know that it would probably be quite common for societies to earn some revenue that may not be easily considered as a donation or a fundraising, or it may not be a grant, or it may not be strictly a commercial activity. And if you do find that there's revenue that doesn't appear to match precisely one of these categories, we do want you to consider whether the activity that you've earned the revenue or cash receipt from has directly helped to achieve the society's purpose. And I guess the point around that is that commercial and fundraising activities often raise funds to support an organisation's service delivery or purpose, but they may not deliver on an organisation's purpose in itself. And we see this quite often for charitable entities, where activities that deliver an organisation's purpose sometimes do not generate revenue, but it can be quite common for incorporated societies to also generate revenue from some of these activities. And I guess as an example of that, a sports club, it might earn some revenue from hosting tournaments or competitions or some prize events. And maybe these activities may be separate from activities that are covered by the membership fees or subscriptions. They might align with the club's purpose, but they may sometimes not be run as a commercial or a fundraising activity, but they're still generating revenue. So in these particular circumstances, we encourage you to consider the service delivery grants or contracts codes. And so even if the revenue or receipt does not relate to a grant or a contract, it can be classified here. And I guess that last reminder is that you can rename these categories to make it clearer for your readers. So I just have some other high-level application considerations to consider. And so first, I just want to bring up accounting for interests in other entities. So tiers 1, 2, and 3 of the XRB accounting standards, they include requirements for consolidation and for the accounting of interests in other entities. And if you are considering these, it may not necessarily be straightforward if your society needs to apply these requirements. And you will also need information from other entities to complete your financial statements. And so some things to consider are, if you own or control another entity, then you may need to consolidate, and that refers to that process of combining financial information across all entities to present a single set of financial statements. You also may consider whether you've entered into agreements with other organisations to jointly run some type of operation or activity, and in those cases, you may need to account for a joint arrangement. And if you have an investment that gives you significant influence over another entity, you may need to be accounting for an investment in an associate. And so there's specific requirements for all of these, and you will be reliant on information from other sources. So it's good to be aware of those. And I've already discussed service performance reporting. But some additional things to consider will be, what are your members' expectations on service performance reporting measures and objectives, and whether you actually have that data required for what you want to report on, particularly as you come into your first time application. And if the society is subject to an audit, the statement of service performance will also be within the scope of that audit. So it may be worthwhile having an upfront discussion with your auditors around the support that may be needed to substantiate some of those disclosures in the statement. And some of the other considerations that are there is that many societies may have included information that is no longer required under XRB standards. We do see that many of them have done trading accounts for bars or livestock. They may have segmented their reporting by membership classes or sometimes by membership or non-membership activities. So applying the XRB standards does not mean that you must exclude this information, but it is worth considering whether you continue or reporting this information there or another method. And so you may consider, does this need to be in the financial statements? Could it be reported separately? Or if you do want to include it, how are you going to integrate that into your notes? Now, another thing is that many societies may not necessarily have needed to report on related party transactions before. And so under the new requirements, societies will need to think a little bit more carefully about some of those relationships with officers or committee members and close associates, and whether those transactions need to be captured. And you should also be aware, I guess, that the Act does introduce an audit requirement for those larger societies. So it's those that are not charitable entities, but have operating expenditure of more than $3 million over the last 2 financial years also. So that gets introduced. But also, if you do have an annual audit on your financial statements, maybe it's a requirement as part of your constitution, there could just be additional time or questions that require consideration on your first time application. So I think it's just important to recognise that there could be a little bit of effort and time in your first time application. Some societies may face situations where the impact is more significant than others, and it's good to try and be aware of that as you go through and complete it for the first time. So that's largely everything that I wanted to cover in this particular session. I do appreciate that the webinar contains a lot of information, so please visit our website. This will also step you through the new financial reporting requirements. And as you complete your first time application, we do have a range of resources that can help with this transition. In particular, we've recently released a number of documents that look at some of the transition requirements of those first time application considerations that have very quickly gone through in this webinar, and a set of documents there. So I'll just pause here. I do have a couple more polls that would be useful just to have everyone answer, and I'll bring those up. And so I'll just give a few seconds, but it'll be very helpful if you are able to indicate what you've found most helpful in understanding the framework and identifying your tier. So I'll just give this a few seconds. Okay, I'll close that one down in a couple more seconds. Thank you very much. And I just have one more to launch. And this one's about what would be most helpful in applying the accounting standards in practice, or has been most helpful if you've already applied for your first time application. Cool, just leave that open for a few more seconds. Okay, thank you. Right, I think I'll just work my way back. I think this brings us to our questions section of the webinar, Michelle.
Yeah, great. Thank you very much for all the information sent through these polls. It just helps us understand where you're getting your information from and what we can help to support. I guess some of the questions that's come through, one of the questions that came through is, do you need to file your financial statements with the XRB? Alex, do you want to answer? Do I answer?
Would you mind just, sorry, stating that question again for me, Michelle?
Oh, that's fine. Where do you file your financial statements, or where does it need to be with the External Reporting Board?
No, so the financial statements for society need to be filed with the Incorporated Society Registrar, which the Companies Office are managing. So it would go through them.
There we go. And then what are the results of the polls, Alex? Is one of the questions that just came through.
Yes. Give me 1 second. I may actually be able to share some results there. So it started with poll 4.
Can you see that? Can everybody see the results?
Hopefully that's popped up on screen.
I'm going to assume it does. Maybe if someone can just say in the chat yes or no, that would be helpful.
I've shared results of poll 3.
Yeah. I guess if I go through poll 4, what's most helpful, what would be most helpful in applying the accounting standards in practice? Most people indicated Tier 3, Tier 4 optional templates with guidance notes. So you'll be happy to know that is on our website. So please go and have a look at our website. We do have a template that you can follow. Poll 3, Alex, do you want to take them through poll 3?
Yeah, so poll 3 was about what resources have been helpful in understanding. I see that the website guidance in our webinar has been largely helpful. And a lot poll 2, showing at the moment. And this was around whether everyone's found it reasonably easy enough to navigate through the accounting standards framework. So we've got some good feedback there, with the majority noting it's fairly easy. And then with poll 1, most are confident or somewhat confident. And I'll just share those as well. And hopefully that's come through for everyone to see. So yeah, no, thank you very much. That's a very, very helpful, that sort of feedback for us.
Yeah. So in the last minute, we might just take this time to thank everybody for joining us. We also just want to say that there's a lot of resources on our website, as well as Companies Office website. So please go and have a look at that. If we didn't get to your question, we'll try to get back to you. If you can just send us an answer, or if you can just send us a question via email, then we can answer you there. Other than that, have a lovely day, and thank you for joining us.